Welcome. Today we have the CIO of Parnassus. We have Todd Ahlsten here with us, and we're excited to talk about macroeconomics. We're going to talk a little bit about bonds, and we're going to spend some time talking about semiconductors. So welcome, Todd.
Well, thanks so much. Great to be in Chicago today.
Yeah. So tell me, what does the day look like for a CIO? What does your day-to-day consist of?
Yeah, I'm up early. I'm a runner, so I love to get outside and just feel the air, touch the dirt a little bit. And then I got kids at home and get them out of the house. After that, it's really into the markets and news. But, you know, the big thing now is there's so much noise in the market. So it's really just anchoring about what are the long-term trends on innovation, on business, on macro, just to make sure we're looking at the right long-term, long shelf life data that drives our investments and not all the day-to-day noise that can distract you. So it's really key just to make sure I'm on the right themes and not get into the day-to-day noise too much.
So what are some of those things? I know right now we have interest rates are on top of mind. We have some macroeconomic things that are going on, and there's some issues potentially overseas. But what are you, day-to-day, what are you thinking?
Yeah, so the first one is I'm a big believer in American exceptionalism in terms of the S&P 500 and our companies, great companies in the index. And so the key thing is there is that advantaged S&P 500 U.S. corporate, just generating the profits and revenues, is that intact? Mm-hmm. And number two is, we're looking at the macro and it's making sure that we're still in a position to grow the economy. Three is liquidity.
Yeah.
And how are we looking on Fed and money supply, global M2 is really important. Mm-hmm. Clearly number four, there's some geopolitics in the world, some obviously conflicts in the Middle East, just making sure that fits into the framework. And then five, getting into the individual companies, that how they fit into that framework to make sure we're focused on the right companies, right sectors, risk management in this environment that's a little fast and furious.
Yeah, so you talked about the money supply. Can you double down on that a little bit and kind of share for our audience, what are you seeing M1, M2, and how does that work?
Yeah, so as many of you know, over the last several, decade plus, asset prices and the S&P 500, NASDAQ are really correlated with global M2 money supply. So that's a broad measure of just money growth in the economy. So we keep watch of that. And it seems that in the second half of the year that may be inflecting higher, like China. Mm-hmm. We double digit, potentially growing their monetary base, Japan. And then we'll see in the US, we have some Fed meetings coming up, but it seems like second half of the year, maybe we get one or two cuts. Mm-hmm. And we get some inflection there, which would be clearly a bit of a tailwind for asset prices.
Got it. So when you look at potential cuts, what does that mean for the everyday business owner and for some of these large companies that you're following?
Well, I think the key thing is inflation obviously went high after the pandemic, and transitory wasn't so transitory. Mm-hmm. And now we have some noise with tariffs, but we still feel cyclically inflation is starting to cyclically come down. Mm-hmm. And at the same time, I think longer term and intermediate term AI can be deflationary. Yeah. So I think lower rates could be good for the average business owner who's deploying capital in this business, borrowing. Could be good for the housing market to kind of get that kind of the wheels greased again, and get liquidity in the system. That would be positive just for the overall economy. So hopefully that's setting up for the second half and into 26.
Yeah, and so with rates potentially going down or maybe staying somewhat flat, what's the impact or correlation to fixed income?
Yes, I think that means different things, different parts of the curve. Mm-hmm. If the short end comes down and the long end goes up, that's not good for the longer term investor. So I think we have to trust Chairman Powell to architect bringing down the front end a bit, and then if we can get inflation coming off later this year into next year, potentially the long end coming down as well. So that could be a positive for longer dated treasuries and bonds. And the other side is we do have a high national debt, so we got to make sure we keep that on the rails. And there's been a lot of debate about could these high deficits cause rates to go up just due to all that issuance of bonds. So hopefully those things all come together. What does it mean? Hopefully the base case is rates down in the short end, down a bit on the long end, and that'd be somewhat of a positive tailwind for bond investors.
Yeah, and there's tends to be a lot of cash on the sidelines. You hear a lot of people investing in money markets, there's a lot of uncertainty in the market. What are some of the things that you're talking to clients and your advisors about if we expect rates to potentially come down?
Well, I think for us, the key is to stay invested in markets. It's been bumpy this year, and people have a tendency to do the wrong thing at the wrong time.
Yeah.
And so for us, some of our fundamental beliefs are, again, the economy in the U.S. remains strong and growing, job market growing. And then on top of that, if we have a rate environment that's stable, that's really a fertile ground for asset prices to compound.
Yeah.
So if we can get any sort of policy clarity on tariffs, and then take that into keeping the economy growing, that's a good setup if you think about rates potentially coming off a bit, coming down, getting some policy clarity in the second half of the year on trade. Economy continues to grow. U.S. companies grow earnings. There's a backdrop there that could be positive for equities and bonds as we kind of get in second half into next year. Clearly, the Middle East is a wild card, and hopefully those tensions can get resolved over time. But we think that's a good setup for bonds and stocks as we kind of get second half and into next year.
Is there any sector within bond, maybe munis, or are you thinking corporates that you see to be where you have your eye out?
Yeah, so we're more focused on equities, but I would say, for us, you think about companies that have durable cash flows without a lot of cyclicality, and think about software companies that are well positioned with recurring revenues, industrials that are positioned where there can be some cyclical recovery in certain areas. And I think one of the key things is just investing in businesses that can avoid some of this AI disruption. Because when you have debt, you got to pay it back. This economy is going to change a lot over 3, 5, 7 years. So really, companies with an AI strategy, sturdy balance sheet, innovation, avoid excessive cyclicality, and those companies, hopefully over time can result in some sturdy returns on bonds. Because you don't want to take risk on top of risk, like yield curve risk, AI risk, disruption risk, cyclical risk. If you do, you better get paid a big spread. So our tendency would be to kind of take that risk off the table and stick with the quality.
So I think that's a great segue into semiconductors, and I know you spent some time in that area for some time. Can you talk to us a little bit about that and what you're seeing in AI and semiconductors and what's on the horizon?
Yeah, some of life is luck, and so when I was 22, 23 years old, I'm just at my 30th year at Parnassus. It's hard to believe, but when I was a young analyst, our founder was a contrarian, and just at that time in the summer of 1995, semiconductor stocks came down. There was a cycle, and spent a lot of time in Silicon Valley as a 22, 23-year-old, and that really was an embedded, just incredible learning experience to build relationships and get into that industry. I've been through 8 cycles now.
Wow.
Went bald, lost my hair. I love it. It's been great. But over that time, it's been one cycles, PCs, cloud, handsets, phones, servers, and then finally into this AI. So I've kind of lived all these with obviously global macro overlaying that, and Moore's law, just every 18 months, transistors doubling in their power to produce more per innovation. So for us now, we see a big runway for the AI build out. If you look at estimates that are out there for $2 trillion in cumulative AI data center build out to 2029. Wow. Semiconductors will be a big part of that. So for us, it's a key thing to own the building blocks of those companies, and that can be NVIDIA, Broadcom, that are selling the chips. It could be Applied Materials or a KLA-Tencor that are helping to build the chips that then go into the systems, and then it's like a Synopsys that designs the software to design the chips that are built by those guys and then sold through AI into like the NVIDIAs to Amazon Web Services. So a lot of growth, and we're going to see a tremendous wave of innovation, and it's just, I think, on the precipice of many years ahead of growth.
Yeah, that sounds really exciting. And I know a lot of people now are implementing AI on their day-to-day basis. So a lot of our users consist of advisors, some are business owners, some are executives. What advice would you give someone that's been doing this for 30 years, thinking about, what should I do next? And then what advice would you give someone that's been maybe going into business, they're in their first year, and they're maybe a newer financial advisor, and they're looking to get into this business?
Yeah, I think we'll start with the last, work backwards. If you're new in this business, the first thing is just ethics, integrity, and even in this AI world, it's going to be human-to-human interaction. We're going to have a lot of AI-powered work, but it's going to come back to trust, relationships, integrity, and those are foundational truths of how you do business. If you build trust, that's super important. The second thing is for the long game. I've learned a lot in 30 years, but there's three things will defeat you in this business. It's stress, it's anxiety, and it's fear. Stress just destroys your productivity as an investor and hurts your health.
Yeah.
Anxiety in this world of like fast and furious, a lot of noise. When you're anxious, you over extrapolate short-term information and you miss the signal.
Wow.
So we need to find signal and avoid the noise, right? And so that's the anxiety part. And then finally, fear is you could be the smartest person, hardest working, high IQ, but if you're fearful, you don't deploy it. You have to have conviction, right?
Yeah.
So as a CIO, my job is every day, I'm a player coach. I know how hard this is. I started as an analyst to director of research, been a CIO since 2008. I want to be that player coach that's lived it and helps to develop my team. And if you can keep the stress, anxiety, and fear down, then the long-term opportunities kind of emerge in front of your eyes.
Yeah.
And you lower the stress, you communicate better, you think clearer, and keeping that blood pressure down, it widens your advantage, the cone to it. So, markets are going to be volatile, but when you keep the stress, anxiety, fear low, you increase the chance of doing the right thing at the right time instead of the wrong thing at the wrong time. And so that's, starting off with the integrity and truths and being human, stress, anxiety, fear. And then on top of that, we're always learning. The economy is dynamic and you have to look forward. And that's key, whether it's semiconductors to any sector. Don't rest on your laurels. Be humble, because when you're humble, it helps you really bring in new information and be open to it. So those are some of the philosophical parts of it that some people don't talk about enough, because those are the things that widen your advantage in a very complicated, competitive industry to serve your clients and do it with integrity.
Sounds like great life advice.
Well, thanks.
It's
helped me for 31 years. You learn a lot, and those are the foundational truths. And hopefully you can catch themes like AI and semiconductors and software and life sciences to let those emerge in front of your eyes instead of just being short-term and stressed out. So then you're going to miss it.
Yeah, it's like catching opportunities. It comes to you.
Yeah, and they said the great ones, like we're in Chicago here, the Michael Jordans, you slow that game down.
Yeah, I love it.
When the chips are on the table.
Yeah.
And if you miss a shot, you got to have a short memory and keep shooting.
Yeah,
like, what did you learn?
But you have to have a daily principle, and I know we have different guests that come on, and there's those similarities of their different specialties and what we do, but you have your daily practices, whether that's just going for a walk, playing golf, so you can see those opportunities. So that's really good. What's one final piece you'd love to leave for the audience? Yeah,
I think AI will be really transformative. And that's going to be not only a productivity tool, but I would just encourage people as a decision-making tool. There's a lot out there. People have noise and biases. So I think it's going to be an increasingly important tool, and you're going to hear a lot about it as investors or business owners or capital allocators. But I would say the key thing is we got to stay human in it. And I think that gets down, again, that integrity and connection. And so we're going to be living in a new world. There's going to be a lot of change, and embrace that change, but also embrace being radically human and get out and meet people and build connections, because those are the things that are very tangible. And so I think if you can be very, very competent in adopting next-gen technology, but also being human, that's going to give you a privileged position competitively, whatever you do as an investor or an academic or a business owner. So be equipped, embrace change, but stay radically human. And I think that'll give you an edge.
That's awesome. Well, thanks, Todd, for the inspirational speech today.
Well, it was great. Yeah, turning into some. But again, I hope that was helpful for markets and the setup, and stay invested, and we'll see what happens.
Totally. Well, thank you for joining us. This has been a pleasure. Really appreciate your time, and thank you for the audience. I'll put the link with Todd's information from today's show. Thank you.